Hi, Tim Biggam for Delta Derivatives, Option Hedges and Edges. Taking a look at a market that's on hold as Fed Chairman Powell begins his two-day Senate Banking Committee testimony. Don't expect really any fireworks coming out of this. Certainly the Fed about as dovish as it can get here. So if anything, I think the risk is to the downside here, especially given the rally we've seen in the overall market. Speaking of that rally, it looks like it may be stalling out a little bit finally after a straight up rally off those Christmas Eve lows. Yesterday's price action, especially on the Russell, where you saw it make a new recent high, pullback close on the lows of the day, struggling again today. I think portends of maybe a short-term top in the overall market. I think the buyers may finally be exhausted. We're looking at 20% plus moves on all the major indices off those lows with nary a pullback. So I'm kind of positioning with put diagonals across the board on these, buying traditional March at the money puts on the major indices, selling this week slightly out of the money puts, just looking for somewhat of a pullback. Given the fact we're up about 20%, just a 1% pullback will really get this kind of trade kick-started here. On top of that, we see implied volatility, the VIX, the RVX, which is the Russell 2000 implied volatility, the triple QIV, the VIXN, all at recent lows here. So option prices getting cheap, stocks at recent highs, earnings season about over with, and earnings were okay, not great. So I think valuation's a little stretch, certainly technically a little stretch here. Options cheap, I think probability certainly favors setting up for a pullback somewhere along the way here, as the fear of missing out trade seems to be what's driving this market higher, turns into perhaps the get me out kind of trade if we get some bad news. And remember, delay is not a deal. That China kind of euphoria we saw yesterday morning bleeding out of the market in a big way. So I think stocks probably due for a little bit of a consolidation or a pullback, probably nothing major given the fact that interest rates are likely on hold for the rest of the year. Otherwise, we're seeing some big unusual call buying in DOMO at all-time highs. This is a cloud computing company. Stocks around 35. Yesterday and today we saw big repeat call buying, the April strike. So I'm jumping in, selling those expensive options. The IV was somewhere in the low 70s, shot up to over 85. So overselling those slightly out of the money calls, buying stock, leaning still bullishly with that big time call buyer, but looking to capture that implied volatility. So we'll see what happens after the two-day Senate Banking Committee testimony ends and where this market ultimately heads. So until next time, as always, here's to good trading. Take care.